Hi, this is Randy Finney with the right side of the chart, and today is Wednesday, November 28th, 2018. Let's take a quick look at the broad markets, and if there's time permitting, I may cover a couple trade ideas that stand out right now. Otherwise, let's start out here with the broad markets. So today, you can see this is a 60-minute chart, by the way, of QQQ. If I don't make mention, normally it's up here in the upper left-hand corner, the time frame. So here's a QQQ hourly or 60-minute chart. And here's today's price action, this cluster of candles right here. So we're above, we gapped above the 163.45 level. Remember, we took out the trend line yesterday and stalled there at that level. That was resistance. So that's bullish. And you can see the PPO is now moving into bullish territory, crossing above the zero line. So there's another check mark for the bulls. Let's just take a look at SPY real quick, and then we'll look at the futures. Now, SPY, on the other hand, has so far stalled out. It had a gap up as well. It ran into 269.55 and reversed there. I also pointed out some developments on the futures, which I'll get to here in a second. They do give me some pause right now in this scenario, but again, as stated before, we really need to take out, this is a resistance zone here. And we took out the trend line in the 268.12 level, but you can see, look at that candle, just perfect tag. You know, we popped intra-period, a quick spike up at the open, but then that candle, we failed to print a 60-minute candle close above. We closed, in fact, right on there and had another failure there and yet a third failure. So again, these are hourly candles. And so that's the level to watch. I mean, it's pretty much, not to oversimplify things, but that's it. We need to take that level out. At this point, you'd also want to see today's highs get taken out. Oops, I did not mean to delete that trend line. I must have had my eraser tool on. Well, we know it was right there, right about there. I'll add that level back in a second, the exact level. All right, so that's what we're watching. Let's see a pop over really today's highs. And you can see the MACD or the PPO just starting to get over the zero line yet, not by a wide margin. And also what happened, by the way, when we gapped up and failed there at the 269.60ish level, we came in and we back tested the trend line from below. So far a successful back test. But let's look at the 60-minute charts of the futures. This is something I posted in the trading room this morning. I took some screenshots right before the market opened and posted those. What's giving me a little pause right now with these breakouts, and again, we don't have confirmed where SPY is still has still yet to take out the top of that resistance zone there. So we don't have really an all clear, despite what QQQ has done. So this is the NQ Nasdaq 100 E-mini futures, and what I'm looking at and highlighted this morning are these negative divergences. So you can see the uptrend line isn't very well defined because we had a little pop below it there, but it does take the form, if you will, of this a rising wedge pattern, a small bearish rising wedge pattern. And most important is that divergence right there. So really it starts at this point here. And so there's your divergence with prices wedging up, making a higher high. And then just as important, I showed you the levels on QQQ, but they don't always correlate because the futures are exactly what the name implies. They're stock index futures. These are right now, we're looking at, the current futures contract, the near month, or the December contracts. You can see they expire December 21st. And so what you have is you'll usually have a premium built into the index futures versus where the actual index, which in this case is the NASDAQ 100, where that's trading at. And that's why you're not going to see the levels won't always be the same, and usually they're not going to be the same. So with that being said, that's why I like to look at the charts of the futures. I know the majority of traders, retail traders, use QQQ or ETFs, but I think if you can track futures, and I've mentioned it before, investing.com will give you free real-time futures quotes and charts. If you have an account at TD Ameritrade, they give you free futures charts, so you can track those there. And NQ are the E-mini futures for the NASDAQ 100. So where I'm going with this is there it is. You have the futures, unlike QQQ, failing at resistance so far, struggling, and looks like I have two lines in very close proximity, but it's about, I'll call it today's highs, around 67, we'll call it 67.60. And we haven't yet broken that wedge, but that again gives me pause. So let's say if we do fail here, then we come down, and And at this point in time, well, anything's possible. I'll tell you, I have to study this a little further, and let's see if we do break down how impulsive it is. But this would be a pretty good support that I'd want to see held right here, about 65.98. We'll call that 6,600. Pretty decent support, but not super well defined. Either way, those are potential pullback targets if these divergences play out. Now, if they don't, not all divergences play out for a trend reversal or a correction. So far, the market's struggling probably as much as anything because it's at resistance. But if they do pop it above here, and that is a possibility, these divergences can be negated or taken out. And by that, I mean if we come up here as the previous reaction high where the divergences start. So if your divergence line then moves up, we can come up here and still have divergence if we reverse. But if we take out that previous high, we take out the previous high here in the PPO, then we no longer have negative divergence. And that would be quite bullish for two reasons. It would burn through those divergences, which are probably pulling in some shorts, scaring out some longs right now. So if they can pop it above here, referring to that 67, 60-ish level, especially take out the divergences, that could be the catalyst for a move up there to about that 69.07-ish level. You can see we have a stop along the way there, about 68.16. Otherwise, we go down, and I'll tell you, you just have to respect the charts right now. Remember the primary, or at least the intermediate term trend, remains bearish. The very near-term trend, over the last few sessions is bullish, but bigger picture is still bearish. So you have to right now respect which way this goes. And I wish at this point I'm almost at coin toss odds, and I don't like trading coin toss odds, so I've actively traded in and out. Came in long on the futures, reversed because I saw this, when I posted this morning, covered and went long again. But again, my trades are so active and so in and out. By the time I'm finished with this video, I may be flat or I may reverse my position. So let's not even get tied up in what I'm doing. But I just want to point out what I will be doing based on what these charts do. Again, if I see an impulsive break above here, these divergences get taken out. I'm pretty confident that would open the door up for a nice move like I talked about yesterday, maybe another 3% to the upside, or a little bit better in QQQ. But we cannot rule out this potential bearish development because as history has showed us recently, every time you can see the negative divergences. This is what's happened when we've had negative divergences. Again, divergent high, small divergent high there, correction. And again, it works same way with these bullish divergences. So this is how I swing trade. And let's look at the daily chart. I want to go there real quick. Okay, now here's the daily chart, and this is one reason I have some, mixed thoughts because there are mixed signals in the technicals. Now, the daily time frames are always more significant what's going on there than the shorter term time frames. And this, strip everything else aside, what you think might happen, what's been happening recently, this is a pretty bullish chart, and I pointed it out recently. We have positive divergence on the daily time frame, and you can see if we can push up just a little bit more. That's why I think we're right now at a pretty important inflection point, because depending on how those 60-minute charts play out, if we can pop up there, burn through those divergences, take out resistance, then that will give us a little more upside here. And as you can see, we'll get a bullish crossover on the PPO. We don't have it yet. That PPO line is curled up. This is what I call potential divergence. I know, the textbooks and everybody else would call this positive divergence, and essentially it is positive divergence. You're making a lower low in prices and higher lows on the indicators. But a lot of times, especially during strong trends, the lines will bounce. What I mean by that, when the PPO or the MACD looks like it's poised to make a bullish or bearish crossover, sometimes the lines kiss or come very close to it, like right there, right here. It looked like we were going to get a bearish cross, but we didn't. The lines bounce. Sometimes the PPO line, which is a white line, will act as support or resistance for the signal line. Right here, it looked like you were going to get a bullish crossover, but we never did. So if we get that bullish crossover, now is that a 100% guaranteed buy signal? No, but it does help to confirm the divergences. Just something I use to scrub filter out or help to confirm that we have put in a divergent low. So far, yeah, everything is pretty, we've seen a pretty consistent rally off that when we undercut the recent lows. And that's usually how these corrections will end. You have a initial leg down, kickback rally, you come in, you undercut that low, washes out a few more longs, weak-handed longs, it ushers in some more shorts, and then the bottom is in as the shorts start to get squeezed out and we start to move up, more and more longs pile in. So I'm giving you a bullish and a bearish scenario right now, and I'm telling you that we're at a pretty potential inflection point. So again, a little more upside will help to firm up this bullish case. As I've been saying for weeks, there is a lot of work to be done. I can go through here. This is just a clean version of a daily chart, but there's probably shows better on the 60-minute chart. Still a lot of overhead resistance levels and work to be done to firm up the bullish case. And as I mentioned on SPY and everything else, we didn't have a divergent low because we never undercut the previous lows. But again, you don't have to have that, number one. Number two, this correction, at least the way it started and the bulk of it, was all about the FANG stocks, tech stocks. And so therefore, QQQ, which has been the leading index, that's the one that has the divergence right now. This is close to being a double bottom low. We had a very brief flush out move there, but you can see most of the trading normalized right around that point there. You can see several, I think about 3 candlestick bodies right around there. And so effectively, that was a double bottom low, and that's quite bullish too. And so again, if you really excluded that little spike down right there, if you were to just exclude that, then you would have bullish divergence on SPY and the Dow and everything else. Okay, let's wrap it up here with a jump from the NQ 60-minute futures over to the daily charts of SPY and QQQ. Let's just come back into the ES 60-minute chart again. These are the charts I posted this morning. Actually, they've been updated since this is a live chart right now. So, but this morning I posted we were right at give or take a hair above it, but the 26, that's about 26.90 right there on ES, and that to me is a pretty significant level. So again, this is why I believe we're at a pretty significant level right now in the markets. If I draw a line there around 26.90, you can see it acted as support and resistance for quite a while now. And we've traded through there, but if you just really focus in, you see a lot of reactions around that level, quite a bit right there. And tried to hold it, consolidated, fell to that level, consolidated, and once it broke, you saw impulsive selling. That's what helps to validate that as an important level. When it was regained there, you had a nice rally. We held it there with a brief fake out, run below. So these are the things that I look at to identify a support or resistance level. And we popped above it, but remember, this is ES. ES popped a hair above it, but yet NQ, the Nasdaq 100 futures, at the same time were smack into their resistance level. So as I always say, you want to wait for the second of the two to break out. I'm referring to the S&P 500 and the Nasdaq 100. So in this case, you had a slight breakout in one. It wasn't very impulsive or convincing. So effectively, you're still at that level. So these are the levels I'm watching, and I'm not crazy about this for the long case. These divergences, they can be burned through, and that's what will help firm up the bullish case. I talked about it before. And we could have a nice little pop here in ES. And first target there is about 27.21. Otherwise, if we fail, you can see some of the levels on the way down to watch, and we'll just have to go from there. And just to wrap it up, final comments: for whatever it's worth, I am leaning towards the bullish case, and so this is an instance. I put up the chart with some different biases the other day, and confirmation bias being one of those. You might consider that. Well, say Randy, if you're a mechanical trader and you swing trade off these divergent highs and lows. No, there's a lot more that goes into my trading. Sometimes I will see a bullish or bearish chart pattern or development, and I may choose to, let's say, override that or ignore it. Because again, as I laid out the scenario, there's quite a bit that I've seen in here that seems to firm up the bullish case right now. So I'm leaning towards the bullish case here. In other words, I'm leaning towards the fact that these divergences may likely get burned through. However, I will respect it. If we start to fail here and we move down, we take out, there's some minor trend lines here, we come on down, and especially if we come on and don't hold that 2672 support on a pullback, that would be bearish, and that could certainly can and will change my outlook. I probably should have covered the 60-minute. Yeah, I already did that. Yeah, started out the video with the 60-minute chart. So there it is. And so you can see also on a pullback, where would the technical picture start to change? Right here, 268.12 is the resistance level that we were struggling with the other day. We popped above it. So that should contain any pullbacks from here. We already had a test of the trend line once. So here's the thing. If you're long, if you've been long the last few days, there's not a lot of downside. You should give it right now. Percentage-wise, that's pretty small. And I wouldn't, do you want to wait, if it's a ticks 1 penny below there? No, but a big red candle through there, especially a red candlestick close well below 268.10, let's call it. That would probably be bearish. And again, you also want to see QQQ confirm. So on a pullback here, really QQQ should any pullback should be contained by 162.20 at this point. Otherwise, I think that'd be pretty bearish if it wasn't. And here's a little minor uptrend line you can draw as well to watch on QQQ. Just depends how actively you're trading. So those are the levels to watch. And I'll do an update if we see anything significant today. For members of the site, I'll do a separate post. There's a couple things I want to point out in the commodities arenas right now, in the commodity arena with commodity ETNs right now. So I'll follow up with the separate post on that. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.